All right, guys, welcome back. We're going to get into these charts. I'm going to show you guys what I see, where I think markets are heading. And so we'll start out with the broad markets, and then we'll jump into a couple individual stocks, and we'll wrap up. Before I get started, leave me a thumbs up. I know there's a lot of you that do it every time. I really do appreciate that. And if you don't do it, just take a second, click the thumbs up, and let's go ahead and get started. So triple Qs here. Here's what we got going on. Really, you have to narrow it down to the hourly, but basically you've got this gap right here. And yesterday we closed down below the gap. So I was thinking we'd come back up, do a back test of the gap, and then continue lower. And that is exactly where we, for the most part, have stopped short. We went a little slightly above it right there. But basically, we're still, this next candle right now is rejecting, and we are selling off. So I think we're heading down to this 280.30, or it's about 280.40 level. You can see that's back here where we had several reactions in this big trading range. You can see we hit it there, rejected right there, crept above it just barely there, and then it rejected, and then lots of reactions along it right there. So it's in the area. Maybe it's slightly higher up around this 281.40, but it's kind of a zone. So I think that we're heading down there, and I think we're doing that, today basically. When we get there, we should find some support because, again, this was the top of this big, long trading range. I think that's where the buyers are going to want to start stepping in. And so I'm expecting a rally to start from that level. Where's that rally go? I'm not so sure as of right now. But the way I'm playing it is I didn't short this yesterday. I had to leave, and I've got a lot of short positions on in individual stocks, but I didn't have this triple Q short. And so the way I played it is I got short on the bounce back this morning, up here around this 285, right around 286 basically, is where I got short. And I'm looking to trade this down to 280, about 280.50 or so. So that's how I'm playing that, and I think by the time I get the video out, maybe some of this trade will have already been done, but I want to just point out these levels so everyone understands what's going on. SPY, well, I've had this line drawn out here for a while. Looks like that's kind of the top of the range right there on SPY. We undercut it yesterday, did a kickback rally. SPY's a little bit different. We could hold this area here in SPY, or come down to this kind of next level of support, which is about 339.13. If we do that, though, that's going to really start to recapture this trading range that we were in for quite a while. So, SPY's a little different, but I do think Q's, gives us the direction to the downside, and that probably will put pressure on SPY, maybe just coming back in for another test of this 342.60 area. I'm a little more sure on where Q's seems to be going than SPY, so just keep that in mind. IWM here, which is the small caps. So you can see we're just kind of topping out up here. If I roll back, really you can see it on the weekly chart, but if I go back on the weekly, you can see this big trading range right here, and we've managed to get above it a couple times. We got it back here in 2018, again in 2020. And then we're above it now, but you can see each time we got above it, it's being sold into and making a lower low. So we had a lower high there, lower high here, and this is about the point where it should probably start to sell off and make a new lower high. So, that's one thing to keep an eye on. Support on this thing is really 159.56. They stepped in a little early and bought it yesterday, and it's up today. But if Q sells off, I suspect this will probably come down to this 159.56, and we'll see if that holds. That's support as of right now. Gold and the dollar, for the most part, for me, have just really kind of been untouchable. I'm not short any of these right now. I'm not short miners. I'm not long the dollar. It's just, you can see, it's just been this chop zone where we've moved up, we've gone down, up, down, up, down. It's just been chopping around a bunch. So I'm more interested, I think, at this point with gold to probably get long if we get a pullback to the 1790 area. Where do I see 1790? Well, if you're new, go to the daily here. and I'll go back and cover it. 1790 was really the resistance level back here in October of 2011 through 2012. This little peak was just an overshoot, and then we had 3 reactions back here in 2011. 1, 2, 3. So that verifies it as resistance, and then we went into the full bear market, and we've overshot it coming up. There's the level right there, about 1790. So we overshot, and now it looks like we're coming in for a back test. So I think we're going to run down, hit that 1790, should hold the support, and then continue the next leg, the next major leg in the bull market that gold's in. Okay, let's get into a couple trade ideas. Some individual stocks. We'll start off. Well, we can look at Redfin here. Redfin here on the daily. Yeah, so this is just doing exactly what I thought it was going to do. I pointed it out about a week and a half, 2 weeks ago, where I was saying this looks like a great short, and it's coming right down into, let me zoom in here, what looks to be the more major support level of around 46.60, depending on when we actually get there. If it gets there today, that's 46.50, but it's in the area. So I think, that should hold the support. Now, if that breaks and you get a nice impulsive breakdown, then we should be going a lot lower. Next level on a breakdown would probably be, what I see is, you've got a level right here at 35 that you had the one reaction, not a lot. And then you've got a couple reactions down here at this 31.60. So I think 31.60 is a little more realistic, but we can mark out that 35. DraftKings. So I'm done with this one. I shorted it really up here near the top, caught the entire move. And so I'm no longer interested in it, but it continues to, it looks like to me it's starting to build. So, like, buyers are starting to step in. The price action that we had yesterday where it was kind of holding strength. Today, yeah, it's down 3.5%, but you can see this candle so far, it's kind of an indecisive candle where they're not selling it off. The buyer, it's just a battleground. So could be building some support. I think most of the downside move, at least the easy money's been made. So I move on that one. Flipping over to my trading platform real quick. Here's triple Qs. You can see it continues to kind of get sold into. They little pops and they sell it. Little pops, they sell it. So looks like it's heading down to that 280, 280.50 or so. Probably going to get there in short order. Tesla. All right, so Tesla continues to drift. Really continues to sell off. Not the incredibly impulsive selling that I've been looking for yet. But it could build, so we'll watch this. I have a little bit of a support level right about where we're at. Let's see where we get that from. We had a couple gaps and stuff, few reactions around that level. So I have that marked out. We could be right at support. Maybe we'll hold here today. It could hold here for a couple days, really, before breaking. Usually when you're at a support level, and especially right before a big breakdown, you're going to chop around a little bit. Also, there hasn't been impulsive selling in this, and so I'm looking for that. And I think it's going to come in the form of a gap down, and not give everyone an opportunity to just exit, but to gap down. A gap down from here would trap a lot of price action, a lot of traders. So, and a lot of people think, a lot of people say that for this thing to get down to the 227 level is just the buyer, it just can't happen. And it can happen, and they need to realize that. However, yes, there probably are going to be some buy points along the way where buyers step in. I can see one right here. You've got kind of a level right about there where buyers could easily step in at 331. It's not going to fall straight down. There will be, levels along the way where buyers step in, but I still think we're probably heading down to fill these gaps here on the, down to 225 roughly. It was just down there in July of this year, and it went up 124%. So to fall, roughly 50% or so from where we're at, 46%, that's not unheard of. It just made this move in the last few months. So to come back and do a back test of that move is completely realistic for this stock. We continue to break this up channel right here. You can see this upward channel. We've now broken it. We did a back test right here, and now we're failing. So you see this upward red channel or price trend line that I have? We broke it right here. It wasn't impulsive. Then we came up, did a full back test, and now we're rejecting. So a breakdown of kind of the level we're at right now, around 421, should set this thing in motion to, you know, roughly 332. A break of that gets us down within this gap ranges. Okay, Philip Morris. We'll look at this one. So I am long this stock, taking a little bit of a hit today. And so this thing broke to the downside. And here's the thing. You had this bear flag or this bull flag. So here's your flagpole where it just moved up impulsively. Then it started to flag out. Looked like it was going to be a bull flag and continue to move higher, but it didn't. It broke to the downside. So that's pretty bearish. That tells me that Philip Morris actually wants to come in and do a back test of, you kind of have some support. Let's see if we can see if we, yeah, right. We have some support around this 74.22. So we could tag that and hold there, or we could even undercut just slightly down to around 73.30. So it might, watch those areas. That's where you should find some support. But now because we broke this flag pattern, it's no longer valid. So it doesn't, you know, we can get rid of it. And it's, you know, it's not a bullish pattern now. So, you know, we're still in an uptrend. You can see higher highs or higher lows, higher, moving higher, moving higher. So, you know, this is the area where the buyers should step in around the 74.40, right around there, depending on when they get there. This is a daily chart, so you got to mark out and look at these daily candles. If we get down here, you know, tomorrow it's around 74.20. You know, it's an ascending trend line, so watch that. Still looks bullish to me, but it's just not bullish in the short term. The short term had this bull flag setting up for a move, impulsive move higher. We didn't get that, so now we have to watch it to make sure it holds these support levels. If it doesn't hold these support levels, could easily break back down within the major price channel, which is going all the way back to 2017. There's your downward price channel. We broke to the upside here. That was a bull trap because it failed. Broke to the upside again right here. Had several tests and confirmations that we are breaking out, but we still haven't had that lift-off move, so watching for that. All right, so Zoom, big negative divergence right here in Zoom on the daily chart. So that tells me Zoom's going to break down, but we haven't got the break of the trend line yet. So even though you have the negative divergence saying that the trend is changing and it's losing momentum, you haven't broke price support. So you got to wait for it to break price support before taking any kind of a short position, especially. And so here's your negative divergence in the RSI. Here it is in the PPO. You can see momentum is trending down while price has still been moving higher. So that's diverging. Your price is diverging from your momentum or moving in the opposite direction. And now you look for a break of price support. So if we go here on the hourly, yeah, I mean, you could say that we broke it. It's not a lot of reactions to really make me feel comfortable, but maybe, you know, you could say this, something like right about there was your up channel. That's broken. So I think we come down to around this area, around 460, you know, we'll call it 460. I really want to see this 460 level go, 459.70. You want to see that go, and if that breaks, that sets this thing up for, you know, a move to the downside. You have this price channel right here that this thing's been walking up, and it got above the price channel and really impulsively moved quite a bit higher. But now we have negative divergence. So if you break back within the price channel, you're probably going to go to the bottom of the price channel and most likely break down to below that price channel. So the move that I see, if we get the breakdown of this 460 area, is probably a gap fill coming all the way back here down to 325. And that would be a move of, you know, from the breakdown down to there, 30%. And from the highs, you know, quite a bit more. So nothing to take action on this one yet, but I'm watching it. All right, here's Philip Morris on the daily chart continuing to play out. And you can see that here's what I liked about this one. You had this up channel right here on the daily. We kept walking up it. Everything was fine. You know, it was bullish. But then I was looking for the break of this trend, and we started to see signs that the trend was going to break. We really started to see it right about in this area right here. That's when you first had negative divergence. There's your negative divergence right there, where we made a lower high on the momentum and a higher high on price. So price was diverging from momentum right then. So then you look for the break of price support, and that came right there. Your price support really broke right about here, September 18th. And then it did a series of back tests, which I used as an opportunity to add to a short position. And so it did 3 back tests, 1, 2, and 3. And now it's starting to roll over. So it's looks good. Looks like it's going to work its way down over time. Yes, there will be areas where the buyers step in. But I think ultimately we're going to run down to this 39.51 area. And that is continuing to look good and play out. Carvana, you can see nice impulsive sell-off today, but still right there at support. This is the entry, the gap entry. So I'm expecting we're going to enter the gap. I don't think we'll fill it. I think we'll enter the gap. We'll do some back testing of the top of the gap. Maybe they'll make it look like it's going to recover. And then ultimately, I think we're going to come down and fill this gap at 170, 174. Carvana had big negative divergence really right here when you made the higher price from the previous high while momentum was moving lower. And you can see the momentum just continues to drop off a cliff here on the RSI. And price is starting to, price is now starting to react to that as well. Price is starting to drop. So again, a break of this level of it's about 289, 290. A break of that, and you should see some impulsive selling to run down and fill the gap. Etsy also starting to break down. We pointed out the negative, it really had negative divergence right back here. So then you look for, and if you got short, even if you got short at the moment when you saw the negative divergence, this thing hasn't really gone much further from that area. It's only up, it's up, 6%. And that's not much for this stock. I mean, this stock can really run. So we broke price support right here, though. Here's your uptrend line. We broke price support right there. And it did a big, long back test. And that was really the best area to get short. And this is when I got short. It was right here on this back test. It's now, kind of muddling around, but looks like it wants to start working its way down lower. First support level, 139. Let's see, let me see if I can tighten this up on the hourly. Yeah, it's about 139.40, I think, is the first price support level. So I think we'll hit that here in short order. And that's a move from where we're at down another 6% or so. So I think we're heading down there, possibly lower, but first price support I see is right there. Someone asked me to cover W. Look, W on the daily, big negative divergence here on the PPO. Negative divergence also on the RSI because you have an equal high, but price kept making new higher highs. You broke price support right here, and it's just been back testing. So you had a back test. There was one. There's another. There's 3. Now it's starting to kind of just drift sideways. So it's consolidating, drifting sideways, getting ready for the move that it wants to make. Could be another back test or could be a breakdown. So if it does another back test, I definitely wouldn't want to ride that out short all the way up there. But you could obviously establish a short on a full back test. I suspect it probably breaks down just because of what the other markets look like they're about to do or what they're doing right now. So I'm watching for that, but I'm not in this position, so I didn't get a good entry on it. But in general, still looks good for the short trade because it's broken price support. It has negative, the price had negative divergence. Momentum is fading, broke price support. It's got all the things to move down to gap fill at 134. That would be the target that I would have. So here's Peloton, and we're going to wrap up here. We do not have negative divergence on the daily chart. You can see we made a higher high right in this area, and price also made a higher high. So price and momentum are both moving up on the daily chart. However, we do have it on the hourly chart, and you can see here on the hourly chart, we started to put in negative divergence right. It was really right here is where we started, and then it continued. This price was a divergent high. And so then you notice that we have it on the hourly, so that sets us up for a smaller kind of move. But I think a move back down to this, back down to this 100 area, I think is pretty real, is realistic for this stock because of how it's run so hard. And then you can see here's your price channel on the hourly, your trend line. We've now broken that. We broke it right here, muddled around, did a back test, and we're starting to kind of roll over. So we could obviously back test again. If we back test again, we go back to the daily here, we might start to put in negative divergence on the daily. If we move much higher shortly and make a new marginal high on Peloton, then most likely the RSI is not going to make a new higher high, and we'll start to get that negative divergence on the daily chart as well. So at that point, you would have it on the daily, the hourly, you've broken your price support, and everything looks good for a move down to the trend line, the major trend line, which is way down here. You can see it's just walking up. So somewhere around this 107.50 or 110. It depends on when it gets there, of course, but that's what I see in that one. So that's what's kind of working right now. Those are the stocks that I see. A lot of short ideas, but the reality is that the market's selling off. You want to go with the current, and if the market's selling off, you want to look for the short ideas. Also, the SPY, the S&P 500, just to wrap up for anybody that's new and they wonder why I continue to mostly be short or bearish. This green line is your bull market from 2009. So this marks your 2009 bull market. And you can see on the weekly chart here, we had a reaction right here in 2016, another one. We had several reactions right in there, and then we broke. In 2018, the bull market trend was broken. And so that's something I think a lot of people don't realize if they don't have trend lines that they're following. Back in 2018, I had this green trend line marked out, and I said, okay, the trend's broke, so now we'll start looking for short ideas. And that's about when I started my channel too. So and you can see when we broke, we had several weeks of back testing, then it failed, then it came back up. In 2019, did a full back test right here in really late 2019, early 2020. There's your full back test, then it impulsively broke, and then the Fed stepped in and pumped the market back up, and it almost did a back test, and it's starting to roll over again. So again, even though the market keeps making these new highs as it ramps up on Fed stimulus, it still just continues to get rejected at this trend line. And so I see this more as a topping pattern. This is your bull market here. This is a big expanding megaphone topping pattern, or expanding triangle topping pattern. And this potentially sets up for, the top of the bull market basically, and a reversal into a longer term bear market. Not just a 1 month, 2 month bear market, but something more like 2 to 3 years, bear market, or maybe longer, who knows. But I think that's what this is setting up. So because it was a long bull market, it takes a while to kind of top out, and then it will, the bear market's going to last a while as well. So again, also big negative divergence here on the weekly. Price continues to make highs, and momentum continues to fade each time. So there's a lot of reasons why, but these are just some of them why I continue to look for predominantly short trades, because the larger trend to me looks like we're in a topping pattern and we're going to start to head down. Okay, guys, I'm going to wrap up here. Thanks for following along. If you haven't already done so, leave me a thumbs up, and I'll catch you